Welcome to TradeTheMBA.com. This is John's reports for the 26th, and it gets just more bizarre by the day. Well, of course, the market was pretty neutral despite the ridiculousness of what Powell was saying in his comments. Um, and it's a big issue because what you can see down the road, and there are going to be easy benchmarks that he's pushing for a recession, and it's one that won't be attractive given what he's doing. Um, there's no way around it. Obviously, the market is, still at an uptick, but for how long is going to be the question because now you start to look at the raw data and this is something we were talking about. He keeps betting on this idea that inflation is coming from tariffs. No evidence to support that. In fact, it's deflationary. Combine it with the fact that you have this immigration exodus from where things were. That is hugely deflationary. We'll start to see that when you start to look at housing prices, because what's going to happen is you're going to see multifamily homes, rents, and that start to decline, and lower purchasing overall, which means discounts in prices to move the volume from an expectation that doesn't exist anymore because the number of people that are reducing it doesn't make it seem like there's a huge amount. But if you already had 1 million self deportations, it starts to have an effect, particularly when it comes to supplies of things and you have too much of it, and also cools off, potential buyers moving into different areas, that kind of thing. And then you couple it with the higher interest rates. It's not good. It's a really, the setup is correct. You know, Reducing the amount of immigrants at the same time with the tariff increase, you have a net zero as far as inflation goes with that. In fact, you have a deflationary setup. And once we start to actually see deflationary conditions develop, it's too late for the Fed. And they should have cut now. And if they don't, by the time they have to do their emergency cuts at the end of the year, um, it's already over. But then it's too late. The market will recognize the panic of that, and yeah. So, fine, we may have a nice, modest summer, depends on how bad the data deteriorates, but that's going to change. So, obviously, the idea of any, increases in rates is an opportunity to jump in and have cash and treasuries because it's still a great yield relative to where inflation really is and where inflation is heading, because inflation is heading to the negative side, barring anything with, of course, oil. And, 65 range still high, but as you see some of those economic changes, you may see that plummet further, particularly if security threats and that begin to diminish. That premium is completely wiped out. Now, this was obviously the war push, but you still have a premium built into here because of the unease in the situation. But the longer that remains soft, you could see an improvement even more from, well, a reduction in price standpoint being the improvement. Now, of course, you see that there have been huge draws and reserves and everything like that. So there's still plenty of economic activity, but we're gonna have to watch how that starts to play out. And I'm just pointing it out for the future. I mean, it's obviously months away, but you're looking at a later part of the year um, struggle, particularly with the pause of all of the initiatives that Trump has tried to push through, the big beautiful bill and all those things, all on hold. The parliamentarians, and now I mean, how ridiculous is it? You have the DOJ now suing an entire district court. They're suing the entire District Court of Maryland for their injunctions and that. So yeah, it becomes a problem, and no sign soon. Now this is where it gets really even dumber. You've got a euro rising, so your dollar's at its peak low at this particular stage, given where we've been at. Even though the U.S. economy is doing better than all of the European Union, why would you be in dollars when you could get a much higher yield, especially since Europe and the rest of the world have been cutting rates? The yield differential is staggering. So does that make any sense whatsoever? No. I mean, it's all an implosion. This narrative by that, Powell thinks that everything's going to hell in a handbasket because of inflation. You can only ignore the numbers for a certain amount of time, and that's going to be problematic for gold. Now, it's interesting though that they've switched, in their tier one capital for banking and that, where they're now going to be able to use their physical gold to make loans on as a tier one capital. So that's interesting. So they're moving back to a gold basis within, overall banking as well. So that's an unusual one, not paper gold, but actual real physical gold if a bank has it. So, um, that's going to be an interesting support for gold broadly, simply because it's being bought all over the world as a hold commodity at this particular stage. What will that do with crypto and that? Well, it should continue to drive it to new highs. There's just no question about it. Even with the adoption, that it's still going to be a place to park outside of the currency volatility. If the dollar drops below the 120 level, well, that becomes an interesting one, because then they're pretty much expecting a complete implosion of the U.S. economy, which that would be an interesting one as well. And potentially, with Powell where he's set up, it creates a real interesting problem, because you're going to have a liquidity crisis, the same as you had in 2008. There's just no other way around it. How severe it gets, we'll have to see. It's a building situation. Now, Trump, they're talking about him, appointing a new Fed chairman even before his term is up. So how interesting would that be? I don't know that it'll have any effect, because he really couldn't make the justification as to why, with rates lower than they were last November, he cut 50 basis points and doesn't do so now when clear inflation is truly below. So it has to be political, because there's no other justification. The numbers don't support it. You can see from our 50K, we rode along with the super high magenta rising. There was relatively no short interest whatsoever. That started to come up a little bit during his comments. So the long setup traded out of there. Where did we start out at? 60.46 was the buy in there. And that went all the way to 61.46. So it was a 100-point move there. No shock. This was all just following the basic read of what the readings were, cyan under red, and it continued all the way until we broke out with the DOC right there. But it was short-lived. I mean, we're still in the backup run, but usually this one ends up being short-lived, and then you fade back into it. So we'll just follow it as it goes. And we had the early bullish move, and then of course, as the chairman got out there to say pretty much nonsense. This is what you got now. European session moving higher post NATO. Everyone's so happy. They're going to spend all these extra billions on defense and stuff, but they're going to put it off budget. So it's not going to be a special facility kind of thing. So it really won't show up. We'll see how that plays out. But again, it's just more shifting the idea of reporting debt to an area that doesn't look like you have it, blah, 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 blah. And it's the same old story. So, we'll be watching what happens. We've already had the recession in commercial real estate. Is it complete? Not if you get continued credit crisis going forward in housing, but the longer term projects, like I was saying, even from when Trump was elected, that the opportunities, if you had specific arrangements where, it was going to be for a specific use purpose, the commercial real estate would be an opportune thing to be into, not just generic, but it's got to be specific use. And now we've got this situation where, you're going to have discounts, because as you can see, most people can't afford a home anyway. So that means prices are too high. And then when you have reduced amount of demand, longer wait time for home sales, it'll all start to play out. It's just a matter of waiting for it. So we'll keep an eye out on for it. But, just thought I'd throw it out there since we've got a little bit of a quiet time in between here. As always, anything relevant, I'll put it on the team chat. Have a good one. Trade well.